What's good everyone, welcome back to another video. In this video, I'm going to be covering how I took this 150 pip short trade on EURUSD. I took a short all the way from 1.104-ish on EURUSD all the way down to 1.089. So if you are interested in how I took this entry and what are my thoughts for these trades, do stay tuned. So before covering EURUSD, let's move over to DXY first because EURUSD moves inverse to the US dollar. Okay, so this is my DXY chart, and I took the EURUSD short last week, so price was around this region over here. Okay, so anticipating that EURUSD is about to go back down because of the bearish bias I have on the daily chart for EURUSD, I am bullish on the DXY chart ever since price pushed down and came back above this huge range formed at the start of the year at about 100.8 levels. So I have been bullish on DXY, and around this level, when price was holding at support at 101.8 areas, I was expecting DXY to continue pushing back above. Okay, let me get rid of all this first. Okay, so looking at DXY, it was holding at support at 101.9, expecting a move back higher up. Therefore, that goes with my plan for shorting EURUSD. So that goes according to my plan for EURUSD. This is on the daily chart, alright, on DXY, and as it held support, it continued pushing back above, and therefore the Euro short was super nice. Coming back to the EURUSD chart. Okay, this is on the daily chart. So I posted on my free Telegram group, I posted this short idea on EURUSD at the start of the week. Okay, let me okay, so I shared at the start of the week that I expect EURUSD to push back up to around the 1.104 areas, which is my key levels on the higher time frame on the EURUSD chart. You can see all these lines over here. These are my quarterly, monthly key levels on the higher time frame, and so I marked it up. It's super strong key levels on the higher time frame, so I use it on my trading. So anyway, 1.104 was my key level, and I was expecting EURUSD to push back up. And I did mention as well in my free Telegram group that I expect it to push even higher up to take out all this liquidity built up over here, because let's say if you are a shorter over here, your stop loss will be over here, right? If you took a position short over here, stop loss will be here again, right? And so I was expecting, because last week was CPI on Thursday, the CPI release, I was expecting CPI to do a fake out move, okay? And I was preparing for the scenario as well, because price might come up and take out all this liquidity before coming back down, which eventually it did. But I want to share with you guys what's my thought process in planning this short trade first. I totally did not take a trade before CPI. Only right after CPI, when price pushed up, take out all this liquidity over here, and then I start taking an entry, because this was a pre-planned trade and it was high probability, because this was another strategy of mine, which is the swing fail pattern trade. Hey, I posted a video on this before. You can go and check it out on how to play this. But anyway, let's play this forward on the daily chart. Okay, on Monday, Tuesday, Wednesday, it started to push down. Okay, I still didn't think it was a good entry for anything, because it was still in the range, and shorting here isn't a good idea, okay, because it's kind of ranging and you might get faked out very often. And right before CPI, I rather not take any chances. I'll not take any positions. Okay, zooming in the 4 hour, sorry, on the 1 hour chart, you can see price on Thursday during CPI, this was the CPI move. Price pushed back all the way up, took out all this liquidity as I mentioned over here, but you can see it formed a huge long wick and failed to hold above 1.104 key levels, which I tell you is very, very important. Price did not really hold above that key level and started to find resistance over here. So as I mentioned before, I already pre-planned this trade. I wanted to take an entry over here after price fails to hold above this. This is a swing fail pattern because took out all the liquidity, failed to hold above. I considered this as a deviation play. Once it comes back into the range, I look for short entries. Zooming into the 1 minute chart. Okay, I usually find my entries on the 1 minute chart. As I mentioned, this was the CPI move. This was the entire CPI move. Okay, but price pushed up, failed to, even though it held a little bit of support over here at the key level, eventually it failed to hold this level, break the CPI, the whole CPI move, broke structure on the lower time frame, and I was starting to look for entries. Okay, as you can see, this was the new lower high over here, and so price came back to my key levels, and because of my key levels is very strong, I took a short entry over here. And what do you know, price also formed a double top on the high on the lower time frame on the 1 minute chart. My stops was about here, and here's my entry. Okay, 1.1034 areas. So I was expecting continuation shorts. Therefore, once I see price breaking this higher low on the 1 minute chart, gives me more confidence to take a short. Of course, my stop loss is over here because ultimately if price comes back above this lower high, I would be invalidated on this short trade. So this is how I actually find entries on the 1 minute time frame based on a higher time frame trade concept. Okay, and as you can see, price even broke structure again, broke the lows. People take profits, comes back to the key levels, and what do you know? It retested this double top area again as resistance, failed to hold above. Therefore, I had no reason to close my short trade. So eventually, price found resistance and came back down again and held as support for a bit, but after a while, it started to break down. And then my entry over here, I eventually brought stop loss to break even, and it was a break even trade already, risk-free trade. Okay, coming out to the 1 hour chart, price on the hourly closed very bearish, started to engulf this entire move upwards. Let me play it further. Okay, this was my next key level, 1.0985. Price was playing around this key area for a bit. I was still holding this short trade because I had no reason to close. Okay, finally, it held a support for a bit, but continued to push back down. As you can see, even if you want to scale in entries, this is my next key level. When you see price breaking structure again, breaking the support, you can just wait for the retest at the key level areas. Zoom into the 3 minute chart. When price broke this key level over here, okay, eventually it will retrace back up. This was the level that previously broke the structure, right? So price shouldn't go above these highs over here. So let's say you broke structure, came back above to fill in this huge fair value gap. You could have taken an entry over here, either as a scalp. As a scalp, maybe your stop loss will be here. You're targeting at least a 3R trade. So this is exactly 3R. Okay, very nicely, take profits. People, after forming a new low, it came back up again. And of course, as I mentioned, price shouldn't break above this 1.0985 level. And so you could have taken another entry over here, stop loss just above here. And if you are intraday trader, you can hold this trade for longer. That was, I think, about 6R trade already. Okay, let's zoom back out again. this on the 4-hour chart. Okay, price continues to come down even further, even breaking this bullish trend line formed over here. Continue breaking down, and on Monday this week, early this week, price tapped into key support area over here at 1.088 areas. Okay, and that is where I closed my full position for about 150 pip short trade. Okay, the reason why I took profits over here is because I seen a huge wick over here on the EURUSD is kind of finding support over here, and zooming out on the daily time frame, I was anticipating some sort of reaction at least at around 1.089 areas, which it kind of did, alright, and also lower at 1.085. This was areas where I thought that EURUSD would bounce from, because this was previously on the higher time frame the area where it started pushing up to create new highs. Therefore, I was expecting reactions at these levels, and therefore just securing my profits. A nice 150 trade is good enough, and I just took full profits over here. So this is my thought process of why I took this short trade, and that was the only trade I took last week. Okay, so this concept is based on the swing fail pattern. I share it and I preach it a lot because it's very, very strong. It's a very good pattern to trade, and I also teach this in my private Discord and my course videos. So if you're interested, do check out my Patreon. Okay, the link is down below. Okay, if you want to join my private group, I also share daily Forex trade ideas as well, together with weekly outlooks. Okay, I shared this early in the week, right? And I also updated daily on the different trade ideas for the different Forex majors, EURUSD, Pound USD. So if you want to win with me and destroy these markets together, do consider joining my private Patreon group. But you can join for free as well. You can join my free Telegram group. Description down below as well. I share the weekly outlook with you guys as well. So that is how I took this 150 pip trade. Do continue to stay tuned for more market breakdowns. Subscribe to my channel, join my Telegram group, join my Patreon group, whatever, up to you. Okay, stay tuned, and remember, the markets are always here, but your capital may not. Peace.